Amateur investors taking off in 5, 4, 3, 2, 1.
How you living? Lil Bill from Audiohead, Amateur Investors, and welcome to the first ever episode of the Amateur Investors Podcast. It is just me today. Hopefully we'll get some people on the show later on, but right now I need to get a hang of doing this podcast thing, of actually recording myself and editing, whatnot. How are you guys doing? I hope you're doing great, having a great day, very fruitful day at that, very profitable. We like profit over here at the Amateur Investors channel. That's what we like. Alright? When we're talking about investing, we're not only talking about money. When we talk about investing, we're talking about investing in yourself. Physically, mentally, spiritually, and of course, as always, financially. That's very important. Alright? That's the main reason I started this channel. It's the main reason I'm doing this podcast, because I want young men and women to be able to support themselves financially. In the long term, that is. Today's today's topic, I'm talking about something that I've been harping on lately. It's been on my mind, been stressing me out a little bit. Can't even lie, man. Today's topic is return on investment. Listen. I know we all want money right now. You want money right now. You want money right now. And if you're not getting money right now from your investments, you're not going to do it. But there's no point in investing in long-term investments if you're going to be impatient with it. If you're just going to go ahead and sell out already. There's no point in investing if you're not willing to wait it out. That's what we're going to talk about. We're going to talk about the long game and return on investment. So, I've got like four main sections when it comes to return on investment. And it's important to separate these things because not every section works the same. You're going to need different knowledge base. You're going to need there's a different set of rules for every sector you go into when it comes to investing. Real estate is different from stocks. Stocks are different from bonds, though not too different. And the last one, no, those are three. Those are three right there. Real estate, your stocks, and your bonds. Those are the first three, the main three we're going to talk about. But the fourth one is something special. The fourth section or sector is something special, something America was built on, man. And we're gonna talk about that later, because I'm really excited to talk about that. So let's get into real estate. Real estate is easily the most common way for someone to become a millionaire, someone to become financially free and wealthy. It gains so much wealth. It can gain you so much wealth, real estate, that it's actually kind of ridiculous, but only if you do it right. If you play by the rules, if you're smart with it, because you can hop into real estate and just horribly hinder your ability to do anything investment related ever again, because you'll dig yourself into such a deep hole and you can't even get yourself out of it. So it's very important that you know what you are doing before you invest. That's why I started this channel. Let people know what's going on, give people tips, tricks, and help them out while I'm on my investment journey. I'm just starting out, hence the name Amateur Investors. I'm an amateur, man. You ever played Skyrim? Yeah, I'm not even a novice yet. My skill tree for investment is at apprentice. It's at apprentice, big dog. I'm not there yet. But I'm learning. and I want you to learn with me. So let's talk about real estate. The majority of people who get wealthy off of real estate, they purchase a property, whether it be residential or commercial. And commercial, let me tell you, that's a whole different beast. That's a whole different beast. I don't know much about commercial, but I know that is very profitable if you take the time and the effort to really build that. But we don't have the money for that right now. So we're going to talk about some residential. You take a property, you fix it up, and you rent it out to some tenants. You allow people to use that space in your absence. You allow people to use your space in your absence for a price, of course. They must compensate you. Nothing is free out here, man. Not corporate America. Not capitalism. Sorry, big dog. You're going to have to pay for my space. And depending on the area, depending on the size of the house, the quality of the house, that you're going to be paying a pretty hefty price to live there month after month. So let's say you're living in Buckshank, Tennessee. If you're living in Buckshank, Tennessee, in a 2-bedroom house, 1.5 bath, I'll be generous, 1.5 bath house, 1 floor, of course, no basement, no upstairs, 1 floor, of course, then you're not going to be paying that much to live there. Let's also say electricity is sparse or scarce. Let's say your heater doesn't work all the time. The water shuts on and off. You are not going to be charging. And if you were living there, you are not gonna be paying anything over $500 to live there. Are you kidding me? You might as well camp in a tent. It's better quality of life. So let's switch it up. You're living in upstate New York. Ooh, wow. Gated community. Oh, now we're talking. Someone comes every morning to trim your hedges. Wow. Look at that. Somebody comes every morning to cut the grass. Whoa, what's up, Philip? Cutting the grass again. Good morning. You have a lady coming in to cook you meals every single morning. There she is. Karen. She's here to cook the meals. Thanks, Karen. Someone cleans your toilets. Shout out Donnie J. Someone cleans your toilets. You know how much money you have to live in a house like that? Well, I guess I only stated the service. Let's also talk about the house. Let's say this house has about 5 bedrooms. Oh, yeah. Huge, abundant backyard. You've also got a pool. Nice patio. Jacuzzi to the side of the pool. Let's say you got a backyard grill set up. Or a kitchen, even a kitchen. A backyard kitchen and bar into one. You got a little shed for your tools and your lawnmower, all that jazz. Just imagine. Beautiful, beautiful, elegant lights, just fixtures hanging from your ceilings. It's a 3-story house with basement included. Very spacious basement. Huge entertainment room. Huge entertainment room. It's got its own movie theater. Wow, look at that. Go upstairs. Each room has its own bathroom. It's just a 5-bedroom house. Wow. That's 5 full baths. Let's be generous. 2 half baths. one on the main level, and one in the basement. 2 half baths, very spacious kitchen, all the appliances you need, state of the art. You got a living room with the best view over the countryside. I don't know much about upstate New York, so I don't know if there's a countryside, but it's got a nice countryside view. You know how much money you're going to be spending to live in a place like that, to rent that out month after month? So much money. I wouldn't put it past you if it was $2,000 a month. Probably more. $2,000, at least $2,000 a month. On top of all those services people who come to service your home every morning. If you add those in, it's probably looking more like $4,000 a month. And you better not charge anything less than $4,000 a month if you're letting someone live in that house. I'm just rambling right now. So, investing in real estate is very simple. Very simple. You buy a property, whether it be commercial or residential, you rent out the space to tenants who are willing to pay the price you have set. It needs to be a reasonable and very enticing price in order for people to grab that and run with it and say, hey, that's not bad. This space is worth it. They have to see the value in the space, the same value that you see if they are to pay your price. The other way to profit off of real estate is to go ahead and buy a property, may it be dingy or just a decent property. You fix it up and you sell it for more than what you bought it for. See, if you buy the property, you fix it up and you sell it for less than what you got it for, then you're losing money. You have a negative return on investment because you just lost money. If you buy it for $80,000 and sell it for $100,000, you're out $20,000. That should make sense. It's basic math. That's called flipping a house. Very simple stuff. Everyone knows, house flippers. It's on HGTV. All these television shows. People flipping houses. Very common way. Another way to invest in real estate is what I call the settler's investment. And I don't really like the settler's investment method very much. It's not something that speaks to me. It's not something that says, hey, I'm going to get you rich. I'm going to make you wealthy, because it will not. Your asset becomes more of a liability at this point. And the settler's investment method is when a nice happy family scrapes up their money, scrapes up a down payment, and decides to buy a house. Hey, honey, I'm home. I have an idea. We're getting old. We're getting to that age. We need to be mature. We need to keep up with the Joneses and the Kardashians. Let's go ahead and buy a house. That house right there, it's worth $400,000. Let's do it. I'll put down $80,000. $80,000 down on that house. We scraped it up for the past few years. Come on, honey, let's do it. And Fred here, his wife decides, yes, let's go ahead and buy this house. This is a good idea. He said we'll make profit. He said we'll greatly benefit off of this. This is an asset, But I hate to break it to you, this isn't the early 2000s, Fred. This isn't the 1990s. That asset, most likely, in our financial and economic climate, has become a liability because you're not really appreciating the value of the house if you're just living it. You can fix it up. And of course, this isn't in all cases. This is my own personal opinion. I don't like this method. When you buy a house, you and your family live in this house for 10 years or so, and you get minor appreciation every single year. You know, you can. Oh, I just don't like it. It's not something that I like. If you like it, that's cool. If you want to buy a house, sit in it for 10 years and hope that it appreciates at the rate that you want it to, which there's no guarantee, by all means, do it. Do it. Some can argue that's called passive income. Some can argue that it is a form of passive income. And I guess it is. But that's a trash way of passive income, in my personal opinion. It's not something I subscribe to. So those are 3 ways to invest in real estate. And if you look at real estate, you have more millionaires made off of real estate than any other investment method known to man. Oh, okay. Maybe not known to man. Well, yeah, known to man. It makes the most millionaires. So, it doesn't make the wealthiest of people, but it makes you a millionaire. It makes the most millionaires. And the average return on investment in our economic status, our economic climate in 2020, the average return on investment on real estate is 8%. That's pretty good. That's pretty good. Okay. It's one of the highest on the list. Second highest on the list. That's a darn good return on investment. Especially if you are if you're renting it out. If you're renting it out, you're going to get more. And depending on how much work you put in, how much real estate you acquire, it's really up to you. You know, it's up to where you are in the States or overseas. It's up to the quality of property you acquire and how much people are willing to pay for the property. So real estate's really up to you. It's volatile, you know. That's not the set return on investment. That is the average return on investment. 8%. Not bad. So let's move on. We got the stock market. We'll squeeze stocks and bonds together. Just knock them out real fast. You got the stock market. Now the stock market is trending right now. It's a fad everyone wants to be a part of now, and more power to you. I'm glad more people are being conscious of their financial state and understanding that, hey, I need to take control of my finances, and the easiest way to invest is through Robinhood. So they get a Robinhood account and just start throwing money in. I commend you for starting. Yes, great, good. You don't need to know what you're doing in the stock market as soon as you start. Right off the jump. You're not going to know what's going on. So you have to just start. But if you continue to invest month after month, year after year, and you're not teaching yourself the game, what are you doing? You're probably losing money. You probably have a negative return on investment. You need to understand what the market is doing. You need to understand how the market works and how you can benefit from the market in order to make a high return on investment. I love the stock market. You know I love the stock market. I talk about it in my videos. I love the stock market. And my method of investing, my main method, is dividend growth investing. I love it. It's the best, in my opinion. It's not very risky, and I'm in it for the long run. I don't do options because I'm not trying to gamble money I don't have. Gamble with money I don't have. I'm not trying to leverage. I'm not trying to day trade because I don't want to time the market. I don't want to predict things. I want to look at your trends and say, hey, that's a very profitable company. Oh, wow. They have a very profitable history. They have a consistent history. They take care of their investors. They pay their investors on time consistently. That's what I want to do. That's all I want to do. Then I will buy your stock. If you pay me, I'll continue to pay you. That's how that works. So the stock market. Like I said, it's a fad, it's a trend right now. Everyone wants to get into it, but not everyone knows how it works. Not everyone is understanding that it's very volatile. The stock market is very volatile, especially right now. It's just going up and down. They're buying these stocks that are put out on these so-called investment guru lists. You know, these experts. Of course, there are some experts out there who put out legitimate lists. And I'm not saying the lists are bad. I'm saying if you're just buying something because someone else tells you to buy that stock or buy into that company, then you are sorely mistaken, my friend. You need to do your own research and then personally determine whether or not that is something you want to invest in, something you want to throw your money in. Because over here at Amateur Investors, big dog, we ain't got that much money. All right, we're gonna be honest. We ain't got that much money. Net worth is under 50,000, big homie. And we're trying to make that go up. But net worth is under 50,000, big homie. Here at Amateur Investors, we are the epitome of amateur. We aren't that wealthy yet. Consistency is key. But also learning your craft is key. So if you don't learn, if you want to time the market and you don't learn how to time the market, you're not looking at trends. It's all about the trends. It's all about the company's history. If you're not looking at the company's history, certain things that repeat itself, then you are at a disadvantage. I'm not saying you're going to fail. I'm not saying you're guaranteed to lose money, because you're not. Nothing's guaranteed in the stock market. It's all a gamble. It's all a risk. But there are ways to mitigate your risk. There are certain investment methods that are a greater risk. Certain investment methods that are a lesser risk. But it's all a risk. Don't get it twisted. Come on, man. Don't get it twisted. So, these people are just throwing their money into the stock market willy-nilly. They're not going to get a good return on investment because they're, how do I put this? They're not looking at the finances how they're meant to be looked at. They're saying, hey, this is like the CGA, Coach Greg Adams, shout out to Coach Greg Adams, CGA hope strategy. They throw their money into the stock market and just hope. Let hope and fate dictate whether or not they make a profit. It's not how it works, man. If it's not a profitable company, if a company's 30 cents, and it's been 30 cents for the last 5 years, you're probably not going to make a profit off of that company. Unless a catalyst just jumpstarts their business to the point where they skyrocket in popularity, skyrocketed sales, then you'll probably make a profit. But look at the trends. Look at repetition. They say actions speak louder than words. Why is that any different for the business sector or the stock market, the economic sector? It shouldn't be any different. The trend says that their history says that they haven't made any significant income or progress in the last 5 years. Why would you invest in them? I don't know, man. This is just what people do. It's just what people do. It's the hope strategy. They see it's cheap, they buy it. I understand. Because over here, like I said, we don't have money at the Amateur Investors podcast on this channel. We don't have money. But we still manage to scrape up our money and buy quality stocks. Stocks we know will make us profit. Because when you invest your money in quality stocks, when you invest your money on stocks that grow over time, aren't super volatile. And the reason why they're so expensive is because they're profitable. They're very valuable, profitable stocks. Everything is related to value in our economic climate. In capitalism, everything has to retain value. And it is so expensive. Like McDonald's, it's over $200. It is over $200 because that company retains value. They are reliable. I know they're going to pay my dividend. And I know the companies are going to continue to grow. I wanted to say the same for airlines, but we all know how that happened, man. Wanted to say the same for cruise lines, but we all know what happened there. We all know what happened there. Slowly but surely failing at the moment. Hopefully it'll pick back up. I haven't really looked into cruise lines and airlines since, I'd say May, June, around that time. And I don't really care to because we're still in quarantine, still Corona. 2020, baby. That's when we're starting this. Coronavirus 2020. That's what jump-started the Amateur Investors Podcast. Look at that. I've got too much time on my hands. So, the stock market return on investment is about 7 to 8%. 7 to 8%, depending on where you're investing your money. But the average is 7 to 8%. And you can greatly increase that return on investment if you do your own research, learn how the stock market works, look at these companies, understand what kind of investment method you are not only willing to undergo, but investment methods you are going to really learn, investment methods you are going to perfect, master, and craft. I mean, not craft, you know what I mean. Perfect, master your craft. You gotta put in the work. You know, if you want to do dividends, if you want to do dividend growth, man, that kind of passive income does not come without putting in the work. You have to put in the work. You have to do your research. If you want a great return on investment, you don't need to do research if you just want to invest. If you just want to invest, go ahead and invest. And I'd argue, if you don't even want to do the research, you probably have a better chance. You probably have a better chance of earning money in the stock market. You probably have a better chance of earning a high return on investment. But you're not doing the research in the wrong area. You're buying individual stocks. You're on Charles Schwab. You're on Webull, Robinhood. Buying individual stocks without doing the research and hoping that they grow. Putting in puts, calls, and for options, day trading at the peak of the morning, selling at the peak of the morning, you know. When you could be just taking that money and throwing it into a fund. All right? There are literally people who are paid to create these funds. People who make specialized lists, specialized funds, ETFs, index funds, REITs. People are paid to do the research for you. And most of the time, you don't have to pay them directly. Other companies pay them, and you pay that company to access their fund. Say, for instance, Vanguard, Spider, Charles Schwab, they have their own fund. M1 Finance, they have their own funds, man. They do all the research for you. And all you have to do is give them your money. And say, hey, fella, you want to go ahead and put this in the fund for me? And they have those specialized those specialized areas of investments. If you like dividends, they have dividend funds. Hey, give me that dividend fund. If you like leveraging or hedge funds, they have hedge funds. Hey, give me that hedge fund. If you like unfiltered, just ecstatic, never-ending growth, sorry, you're on the wrong place because this is volatile. But there are growth funds for strictly just growth. Just growth. And the portfolio is so diverse already that you're mitigating risk. You're going to make some sort of return on your investment. Some sort. So if you don't want to put in the work to do the research, hey, no problem. I'm not mad at you. No one's mad at you. But you're putting in the work, or you're slacking and not putting in the work in an area you need to put in the work, when there's an area where you could just slack off, not put in the work, and still make money. So I urge you, if you don't know what you're doing and you don't care to know what you're doing, invest in ETFs, invest in index funds, invest in REITs. Please. I want you people to get some profit, get some money. Grow your portfolio. Let's get that net worth up, baby. It's 2020. What are we doing? Let's get that net worth up. Now we're going to talk about bonds. Bonds are cool, I guess. Bonds are cool. They're like government stocks, if you really think about it. Government stocks. Give the government your money. They say, hey, I guess it'll grow. It's gonna grow. Yeah. Let's be frank. Bonds, they have a ROI of 5%. Average ROI, return on investment of 5%. That's not bad, I guess. But I don't really invest in bonds. I haven't done the research on bonds. I don't even know exactly how they work. But I'll learn. My grandmother, she got me a bond. Or she invested in bonds and got me a little bond certificate. I've seen a physical bond certificate. It was for $50. I don't know when it expires. I don't know if it does expire. But I'm very far away from that certificate right now. Hopefully it doesn't expire. It was pretty cool. I didn't get really anything out of that. I don't think my granny got anything out of that either. So she got a negative return on investment. Jeez. I don't know much about bonds, but I know that they have an average return on investment of 5%. Now let's get into the meat and potatoes of this, man. I told you I was excited, and I wasn't kidding, alright? I was not kidding. Lil Bill does not kid. The meat and potatoes. The hands down best, most profitable, and probably the best way to gain status as well. The best return on investment is the business sector. Not the working class. Because you're investing all kinds of time for what? 9, 10, even if it's $15 an hour. It's not enough. But return on investment in the business sector, create your own business. Create your own business. Start a business. Become a owner, a CEO, not even a CEO, the owner. Become the owner of a business. Scale that business until it's incredibly wealthy, until it's self-sufficient, until you have people working under you, running the business for you. You create a product. You create, I don't know, what do people need? You create something that wipes your behind. It wipes your behind after the toilet. Right? At first people think it's silly. Wow, look at that. But they buy it anyway. Wow, that's silly. Let me go ahead and buy this. They buy it after you produced like 100 units. They buy it, starts wiping their behind for them. They're like, wow, this is pretty cool. Let me recommend this to my friend. Their friend buys it. Wow, this is awesome. They have a little house party during Christmas, birthdays, friends and family come over, use the toilet. I am getting wiped all the time. Wow. This self-wiper is amazing. Let me post about it. They start posting. Social media. This thing wipes your behind like a champ. Like a freaking champion. It's uncanny. There's nothing like it. People on social media see it. They buy it. Their friends and families come over for holidays, Christmas, birthdays, parties. And everyone wants to get one. You know, the cycle continues. The cycle continues with recommendations, posting on social media, and other people using it at friends and families' houses until everyone in the country, everyone in the world has a booty wiper. Everyone has a booty wiper. You know how much money you're going to make depending on how much you charge people for that? It doesn't even matter. Because you went up from 100 units to, let's say, 30 million. And you charge, let's say it costs $15 to create a booty wiper. And you charge $30 to buy a booty wiper. You're making $15 off the booty wiper. And if you have 30 million, let's pull out the calculator. 15 plus 30 million. That's about 30 million 15. I don't know if that's right, but it looks right. 30 million 15. That sounds wrong. I don't know if I'm reading the number wrong. I don't do numbers like that, man. But I hope I'm not reading the damn number wrong. That's a lot of money. And you're paying other people. When you get that amount of money, you can pay other people to do your job, to supervise, to manage. You can pay other people to create the product, to ship the product, to deliver it to people, to do maintenance of the product, to market the product, until you are growing at an unstoppable rate. Of course, nothing lasts forever, except for Amazon. That will last forever. Oh boy, they're going to take over the world one day. Watch, Siri's not going to be happy with us. Or is that Alexa? Sorry. Siri, everyone's over you. But Alexa, she's something to worry about. Something to worry about. Start a business. Anything. What is your passion? Do you make music? Are you a producer? Monetize that skill. Charge people for your time. Do you create beats? Charge people for that product. Are you a rapper? Do you rap? Are you a sought after rapper? If you're not, hone your craft, become high status, and people will pay you to be on their tracks. Do you like art? I don't know what to tell you. Good luck selling that shit. You can start a gallery. People will pay you to have spots in your gallery. There you go, business idea. If you like video games, you can first you become a professional gamer. Start a team, an organization. You can start an event planning business for video game events. So if there is an esports title that wants to come to your city, you are able to host that event, set it up. Do you like food? Become a food critic. Become a food critic and have people pay for your services of criticizing the food. It's an easy enough job. Probably harder than what I think it is, to be honest, but I bag on them a lot. Food critics, just eat. Eat. This is good. This is bad. Here you go. Here's a couple grand. Get yourself something nice. Just for that, I don't know. Guess I haven't, over here at the Amateur Investors channel, we don't have that much money. We broke out here, so we don't have the taste for the finer things in life yet. We'll get there, though. We'll become a food critic, too. This is good. This is bad. I'll figure it out one day. Start a business. It doesn't even have to be something you like. Preferably do something you like, because if it's something you like and enjoy, you're probably more knowledgeable about it. If it's something you like and enjoy, you are more prone to become more knowledgeable about it. Become more skilled at whatever it is. So, do it. Start the business. It's going to take a lot of work, okay? Depending on what kind of business you start up, you might have to get a build. If it's brick and mortar, you're going to have to buy a building or rent a building. Then you're going into real estate. Then you need to understand real estate values. You need to understand commercial real estate values if you want the best deal. If you want the best ROI, because that's an investment. Renting out a building for a business is an investment. You may have to take out a loan, whether it be $5,000, $10,000, or $50,000 just to start up your business. You can do those Patreon things or those jump starters, Kickstarters, whatever it's called, if you really want to. And those are awesome, because you really, in the long run, you really don't have to promise those people anything. I've funded a couple Kickstarters, and I'm not expecting to be compensated for that investment. So I have a negative return on investment for that. I pretty much just paid someone to start their business. You can do that. You can start an online business. You're still going to have to invest in that. You're going to need to buy a website. Whether it's getting a computer to build the website yourself, buy or host the website from one of these other companies. Have a subscription, a yearly subscription from one of these companies to host your website, or have someone else build your website for you. Still an investment. You need to buy a domain name. You need to keep that domain name. You need to pay for marketing for brick and mortar and online stores, especially the online stores. You have your own marketing with the brick and mortar by having it sit in a city, but then you're kind of bottlenecked because it's just sitting in one part of the city. Online stores are worldwide. It's a worldwide store, but nobody knows where that store is, nor do they know what it is or what kind of value you retain, so you have to market. Business is what makes America America. And you are literally incentivized through tax breaks and other financial benefits to start businesses. Because you are providing value for people. You're creating jobs. If you start a business and hire on an employee, you created a job. You are cycling the economy. Bravo. That is what we need. That is amazing. That is America right there. That's capitalism. You created a product or service. It retains value. Other people see the value in that product or service. They pay you for it. You get enough money. You're able to hire other people so they can make a living. That's capitalism. It's a beautiful thing. Beautiful cycle. Beautiful cycle. If done right. Some people mess it up. And they say don't start a business because it's prone to fail. Who cares? Nothing comes without risk. You can fail out of college. You can fail out of trade school. You could walk down the street, trip and fall, hit your head, and that's it, man. Nothing comes without risk, big homie. Nothing comes without risk. There's not a set return on investment. I researched it. I did. I really did. I couldn't find a set average return on investment for business startups, business in general. And I believe that's because no one was in consensus, because it is what you make it. Are you willing to put in the work? Are you willing to work 20-hour days just to get your business off the ground? Are you willing to put in half of your yearly income into the business? 75% of your yearly income into this business, knowing that it may not take off the way you want it to, knowing that you may have to shut down. And if you know it's not going anywhere, there's no shame in calling that quits and say, hey, this isn't taking off. That's called being smart. That's not called giving up. You know, you can't be delusional with it. You can't, if you know that business is not going to take off, if you know there's nothing more you can do for it, when there's really, realistically, always something else you can do. If you're not willing to put in the work, don't even try starting a business. If you know it's not going to take off, cut it right there. Start a new project. With the knowledge you gained from the last one, this one may take off. Trial and error. Nothing comes without risk, man. Start a business. And some of you are listening to this like, well, if everyone starts a business, who's going to take the job? Who's going to have the jobs? Who's going to do this and that? That's the thing. I know not everyone's going to start a business, so there's no point in even asking that question. Not everyone has the drive. Not everyone has the patience to grow a business, to work and scale. It's a lot of dedication, man. It takes years. I own 2 businesses. One's a production business. One is a computer hardware business. Do a little bit of software stuff, but I'm still learning that. I'm 21 years old. 2 businesses. And after 10 years, I'll probably just be taking off. And I'm being realistic. I don't think that my businesses will take off in the next 2-3 years. I know that I'm gonna have to put in work for years. I'm in this for the long run. That's why I started dividend investing, because I know that I could use that income to supplement my businesses, where the real income is going to come from, where my real wealth will be generated. And I want to be able to generate $1 million one day. I don't want my net worth at $1 million. I don't want everything I own to add up to $1 million. I want to be able to say my businesses generated $1 million in profit. That is amazing. That is uncanny. That feeling will be amazing. But it's not going to happen anytime soon. So, you know what I'm going to do? I'm going to keep working. I'm going to keep grinding, keep scaling. I'm going to have to sacrifice time with friends, time with family. But that's okay. And that's okay. Because I know that my return on investment is going to be substantially higher than someone who isn't doing anything at all. And I urge you all to please be doing something, even if you're going to school. Nothing wrong with going to school. You know, tend to the mind. Go to school, get a trade, do something, man. Support yourself. If you don't want to start a business, don't start a business. If you're content with where you are at in life, if you don't need a whole bunch of money, shout out to you, man. Kudos, man. We ain't hating over here. We're not hating over here at the Amateur Investors channel. Good. If you're content, keep doing what you're doing. This video, this channel, is just not for you. Until we get into the life betterness, health and wellness portions of the channel, then you might want to stick around, because that's gonna be awesome. I'm really excited for that. But yeah, I'm glad you guys sat through this. If you did sit through this, congratulations, because I was rambling through this a lot. I know I was. First podcast, baby. That is done. That shit is. I swore on the podcast. Oops. That is done. We can cross that off the bucket list for tonight, because I have work to do for the rest of the night, which includes processing some songs and maybe making a video for Audiohead about tips and tricks on FL Studio, because there's a lot of things I know people don't understand about FL Studio. And when I search through YouTube for tips and tricks, I have to sit through a 15, 20, 30-minute video on someone showing me tips and tricks, talking. No, I need a short, clear-cut, dry 5-minute video on simple tips and tricks. And when I say simple, I mean very simple. I mean, I'm recording this podcast in FL Studio right now. I'm talking about simple stuff. If you're a producer, you may not see that. If you're an upcoming aspiring musician, go ahead and check out Audiohead. Be on the lookout, the channel Audiohead. Video's gonna pop up there. And as always, if you're on the Amateur Investors channel, go ahead and subscribe. Hit that like button. Turn on that notification bell. And I will see you later. If you are on Spotify, I guess follow the Amateur Investors Spotify. Go ahead and follow us on Spotify. Wow, I need some water in this joint, man. I'm pretty sure my voice just got coarse. Ugh. I need some water in this joint. Yeah, go ahead and follow the Spotify and like it. Share it with your friends, man. Or not. I just hope you took something out of this. You got some inspiration, motivation to go ahead and invest, and you gained a little bit of knowledge on investing. So let's recap this. Real quick before we go, we want to recap this. First sector of return on investment, real estate, 8%. Good percentage. Second return on investment is 7 to 8%. 7% for the stock market. Stock market is 7%. I'm repeating it because I need you to get that in your head. That's 7% more income you didn't have. Look at that. It's amazing. Next sector, bonds. 5%. 5% more income you did not have. Amazing. But it's very volatile. You have to understand. It's malleable. The stock market is malleable. You can earn more, potentially, with ETFs, index funds, and REITs if you don't want to put in the work. Even if you do put in the work, those funds can gain you more money. Last but not least, the sector with the highest, not average, but the highest return on investments. The return on investment that will make you the wealthiest. Business. The business sector. Capitalism, my friends. The business sector. Start a business if you really want to become wealthy. Or do real estate. Do any of these things. Consistently become dedicated. Learn the craft, and you will become successful. You will have some sort of success. I guarantee it. I can guarantee that. You will have some sort of success. Whatever form that success takes. You can become a millionaire with any of these. Any of these four sectors. Sectors. Real estate, stocks, bonds, business. So I urge you to learn and just take the risk, man. Please take the risk. Here at the Amateur Investors channel, we don't have money. We're broke. Here at the Amateur Investors channel, we make less than $30,000 a year. So we need to take the risk. And that's what we doing, baby. Thank you guys for watching, man. Stay tight. I'll catch you in another video.